Welcome to today to the Pacific Northwest Farmers Co-op Market Update. I'm Trudi Allenbaugh. I have also with me Shane Rebold and Lane Hannes. Quick disclaimer, as we do always, the views and opinions of this program are of the hosts and are for informational purposes only. There's substantial risk in trading futures and options, which you should carefully consider prior to trading. Okay, so to get right into it, another WASD report today. Going to just do some quick number overview on that. Really for the most part, it was right where the industry was kind of guessing anyway. Not a lot of changes. U.S. wheat stocks were increased by adding 5 million bushels from imports and decreasing seed use by 1 million. Stocks went from 931 to 938 million, which was a little above the guesstimates of for that range.
Right.
Breakdown by class, couple of interesting things to note there. They did decrease hard red winter stocks by 3 million. Still a very burdensome 447 million. That's a 57% stocks to use still. Yeah. Minor adjustments in hard red spring and soft red winter, but soft white, however, was kind of interesting. They did increase the ending stocks by 11 million bushels by reducing 10 million bushels of exports back down to 200, and they also had 1 million import increase. So stocks to use 30%, not burdensome. I mean, when you look at the other classes, it's the tightest one.
Yeah.
But
I think for white wheat, that's average.
Yeah. Right. It's not something that we're in supply risk.
Right.
But I was going to ask, like 1 million on imports. That kind of shocked me. I hadn't seen that kind of adjustment for a while.
I had to look that up. Why are we importing white wheat? Don't we have enough? And where did it come from? Ultimately, it came out of Canada. Yeah. Canada's have some white wheat production. It was hard to find data on how much they grow. 62% of their wheat is similar to our DNS, Canadian Western Red Spring. The white wheat fits into their other classes, which they produce like 8% of. So it's white spring wheat that we're bringing in probably to our mills in the East and Midwest. So insignificant.
Yeah.
But,
I know. I thought it was interesting though, too.
Right.
So it's like, where'd that come from? So I guess a couple other things to note on the by class was looking at the balance sheet for the end of the marketing year. So USDA, the marketing year ends May 31st. For us in white wheat country, our new crop is July or August, but end of the year is May 31st. Starting new year of June 1st, we have started to see new crop sales on the weekly export sales June forward. I kind of think this report maybe is transitioning into a little bit of that balance sheet reduction on the exports because what did it say on the week's inspections were 100.
Yeah, so weekly export sales report came out first thing this morning and total it all up 198.5 million bushels of sales for this market year, and we're pretty much done selling stuff for the market year. So there'll be some slight adjustments, some cancellations, some overshipments, but right there at 200 million.
Yeah, so that's the point on that we got, that we will see more exports into the next marketing year.
Yeah, although we didn't see any last week. Yeah. It's got to have something to do with the Easter holiday.
Yeah, I think so. Yeah. But there was some this week. So things are looking good. White wheat demand has been steady. We've seen a few feed sales or interest in some feed. How much is actually trading white wheat off the PNW is to be seen. Some of those are optional origin, but
yeah, there was one surprise in the news this morning. We saw that there was a feed boat that went to Korea out of the PNW. It was assumed to come out of Australia because they're cheaper values, but nonetheless, it came off the PNW.
Yeah, for sure. Okay, WASD also some going corn. Lane, I was going to ask you because I think I asked you last month. The USA didn't make any changes in the corn balance sheet, and how can they not change the export sales?
Right. Well, they're above pace for export sales right now. If you look at weekly sales reports, I think it's too early in the market year for them to make that change to the balance sheet. They've got until the end of August to make those changes. So they're going to let that play out a little longer. Then they've got to think about, okay, where are acres going to be this spring for corn? And how do they transition this year's balance sheet into next year's balance sheet? So,
which we just saw on the planted acres, or
planting intentions.
planting intentions. Yeah, it wasn't planted
that's-
acres, intention. Yeah, so
and there's not a whole lot of buy-in to what that was actually printed. So right now they're just punting. And to give everybody some reference, the corn stocks to use ratio for the U.S. for this market year is going to be like 13%. Last year was a little tighter, 10%. So we're pretty comfortable on corn right now. Soybeans is a different story. Shane, anything notable on soybeans? I saw ending stocks to use is like 8%, so tighter. What's going on there?
Snugged up a little bit. They shortened up exports by 35 million and increased crush by 35. So just exchange those two. Exports were down due to tensions with China. We've been back and forth. We were getting some headway. This Middle East tension isn't going the way China kind of wanted it to. They're more on the Russia-Iranian side. So we'll see what that means. And the further out, Brazil's also 83% done with their harvest in soybeans. So they're starting to make some shipments. We could see China pull back on exports, more focus onto them.
Yeah.
Heavier stocks. In
Brazilian
Brazil.
beans are cheaper right now.
Exactly.
They had
They're
good
just gonna
crops.
flow.
They did raise ending stocks for corn in the world based on South American production too.
Yeah.
So,
right, bigger production and not a lot of adjustment on the exports. But I thought same thing. It was like starting to see USDA trim that number because of the sales for China hasn't been there. And we've seen that week to week of pretty low, and because of South America too.
And then again, looking at the world as a whole, we saw something interesting in wheat. What was it, Shane? India?
For India, yeah. They, how did they put it? They backed off domestic use in India by 5 million, was it metric tons? Which was huge. To us, it seems big, but for India, they're a huge, grower of that. So, is this a play, as we talked earlier before this, is this a play going into next year? They said with fertilizer prices, and maybe you guys can expand on that. Fertilizer effects out of the Middle East.
Right. Does it affect planting? Does it affect consumption? Does it?
How's this going to ripple out?
Because on the global stocks, there was no changes in the production, but they raised the 6 million tons of
Carry out.
Thank you. Couldn't think, and then decrease on the consumption. So it was kind of like that. It just seemed a weird way. I think that's the first report in a few months that we've actually seen global stocks increase.
Change.
We've seen U.S. stocks increasing and usage increasing on the global stocks, but these are increasing. So I thought that was kind of notable too. So
another note. Next month, May, we will start to see our 26-27 U.S. crop projections for wheat
in the WASDE report.
Correct.
Okay. Cool.
Look forward to that next month.
Yeah. All right. Let's shift over to cash and futures markets. For the month of March, the cash wheat traded in a 30 cent range, and futures, because of the what's going on with Iran and crude oil, it traded in a 70 cent range, and that's just the snapshot of a month. So a lot of HTA opportunities, flex contract opportunities. Everybody was doing really good at getting orders in and scaled up and taking advantage of that. Going forward, looking into the new crop that's coming, where does cash go from here? Is it going to continue to be range bound? It sure feels like it to me. You got to have that demand behind it, regardless of what the futures are doing. You've seen that really pretty weak basis, but on a cash price level, we've seen some pretty strong numbers considering we're going into new crop production that potentially right now looks pretty good.
Yeah. And we'll talk about what that means for your marketing as we come to a close. But what are the factors driving cash and futures right now? Of course, what's going on in Iran is the big one. Crude oil was leading all commodities higher. Things have come back down now. If you look at the September Chicago wheat chart, today's price is about right where we started on that last day of February. So what else? The Super El Nino keeps coming up in the news. What is that going to mean for world ag output? I just Googled it because I tried listening to this meteorologist, and man, it's going all right over my head. So what it means for world production, it's typically good for the United States, and a country that it's not so good for is Australia. They're somebody we're competing with a lot for our business into Southeast Asia, so that could be a positive for our white wheat export trade. Other countries affected. China tends to dry up a little bit, have troubles with their crop production, so that could be a positive as well on a world scale. There's less production there. Then it just
In
means
South America too. I mean, kind of in that whole
South
debate.
America, Brazil, Argentina, they do tend to get wetter.
Okay,
So that's
so
going
it's
to produce
actually-
more corn beans. So more competition there. The Corn Belt in the United States will benefit from this super El Nino. Now, the one thing I did pick up from the meteorologist is sometimes these spring forecasts is a swing and a miss.
Yeah.
They have a timeline for how this thing's going to develop. They say by August, they should know pretty well whether or not this weather pattern is going to continue.
Okay.
Yeah. So that's the disclaimer.
Yeah.
We are not.
We're not meteorologists.
Yeah.
But it is. It's very interesting because it's just kind of been building. We've been talking about it for about a month now, or maybe a little more. Even Kyle talked about it too, and it's continuing to progress. And so
And it's moved from El Nino to super El Nino.
Yeah. So, and that's something we were talking about on Australia and everything with the Strait of Hormuz and energies and oil not moving and fertilizers and all that. And what does that mean in the short term and the long term for white wheat?
Yeah.
And, planting and production, it's all of those are still the unknowns of, not so much in the nearby, but in the long term. Is it next year? Is it?
Those are the potential factors that help us out. In the near term, the cash sales, or let's talk about how the white wheat's been marketed here in the PNW. Lots of great HTAs put on with this run up in the board. We think it's time for diversification, getting those cash sales on so that you've got some coverage moving into harvest. We could potentially see negative basis.
I was going to ask you that because we've really seen that basis be pretty weak because the board is so much higher, and there's been demand done at these cash levels, and you're seeing that with the weak basis. So if we have a negative basis at harvest time when you need some cash off the combine, those kind of things, I think that's where you look at these cash values. Even though they softened up a little bit today, I think they're good numbers. And another real good thing to have just like with HTAs, you got to have your targets in there. You have some orders and scale up so that we can take advantage of these fast moving markets.
Definitely. Yep. Cash targets are going to be a great tool to use from this point forward.
That way we're not trapped in any, cash isn't enough, but now the basis is weaker. So you just take a little bit of averages of everything. And I think there's going to be a lot of opportunity for that.
Right.
Shannon was going to ask you on canola. We've seen some really strong canola prices. What are your thoughts on new crop there?
It's backed off a bit. We're right at 1975 today. The conflict has pulled some volatility out of the market. We gapped down here 2 days ago when all this ceasefire happened. We regained a little bit of that today. Current market sentiment is maybe sideways, a little bit of bearish just because planting intentions are up not only locally but up in Canada. Canola is still viewed as a ray of light by some marketers here in the U.S. and in Canada. It's a profitable commodity still, so there's a lot of intentions going in on this. Moving forward, I think same thing as soft white. Let's get some new crop sales on the books. Let's protect that. I'm starting to turn bearish a bit. Sad to say.
When you have production, I mean, there's a lot of crop out there, the potential, and it's like, without something disrupting the movement, the all sediments are, just like all harvests, you're going to be weaker coming into it. So
there is one underlying factor that isn't really, it is ag related, but not ag related, more energy related, is the Canadian dollar. Just looking over the life of the contract for the Canadian dollar, we've lost what would be equivalent to 75 cents to the grower just because the dollar value went from 74 down to a 72. We can regain some of that, which we've made positive factors since the ceasefire. Okay. So it's kind of a double-edged sword. It's not going to make up one-for-one gains on loss on oil versus equal on dollar exchange, but it will help, cushion the blow. And I wanted to say the blow, but it will help kind of hold some support in there on that cash price.
So do you think, I'm just kind of looking at some of those levels that we've seen, around that $20 range for a new crop contract with increasing in potentially planted acres, not only here, we've had some, higher seed sales of canola, and globally, it probably is a pretty solid number to start at.
I believe so. I think this, 1975, even 1950 up to a 20, let's get a layer in that range for sure.
Secure some of
If
that.
not two,
Yeah.
I wouldn't bat an eye at doing 200 pounds per acre type of deal on that. Normally, I've been very pleased this year because we've gotten more interest on new crop sales than I've seen in a while. So it's great to see that we're getting over that fear of, selling new crop.
It's tough to sell something you haven't gotten
Exactly.
around yet.
Yep. Yep. It's been around long enough. People know their expected tonnages. Even if something happens, we will have 500 pounds.
Yeah.
So definitely a win there. And, looking onto beans like we talked earlier, and South American bean crop, being harvested in big crop, weather's going to help them. We could see some downward, further off pressure on this deal. So
Cure for high prices is high prices.
prices.
Yeah.
Yep, absolutely. So the crush is helping, the biofuels are helping, but are we going to blow to $30? I don't think so.
Not without, not
Sorry,
without
I
some
wish.
production loss or
Yeah,
something,
yeah.
So, going into just some closing thoughts and outlooks, one of the things that I wanted to talk about that we've kind of already talked about a little bit too, but just this volatility and uncertainty that we have right now, and that's not going away. We don't know when it's going away or how long that's going to happen, but it's really given us some opportunity. It's given us opportunity on HTAs, flex contracts. Cash contracts is what we really need to be making sure we're targeting some of those levels, and we can do a flex contract with the cash and just like when we talked about being in a range bound market, how do we get more out of it? I think those flex contracts for a new crop on cash is going to be a really good option too, to try to increase some of that value and that profitability. So be ready, because what we've seen in the last month is how swift this market's going to move.
Yeah.
So you got to have those orders in ready to execute so that we can help you out with that. So anything to add to that?
Oh, I don't believe so.
Yeah.
Got anything to add on that?
No, covered prices, strategies, options. Yeah, definitely.
Okay. Thank you so much for joining us.
Thank you.
Thank you.